Hello and welcome. You're watching Markets at Noon on ET Now. I am Snehisha and with me is Asesh Adwariu. Just taking a look at some of the earnings candidates and it's LIC. Let's pull up the stocks. Let's take a look at what the stock is doing. Numbers have beat estimates, looking like a good set of numbers. The annual premium equivalent is up 22% on a year-on-year basis. The VNB margins are also looking very healthy at 25.7%. In fact, LIC has posted a strong fourth quarter and we've spoken about what the metrics are looking like. ET Now's Anurag caught up with the management and here is an excerpt from that conversation.
As you know, VNB margins are dependent on a good number of factors, and there are some factors which were turning favorable. Also, we have a good contribution from our non-par savings portfolio, which has been growing as we used to mention in the earlier conversations also. We also found that the ticket size is also improving, thereby increasing our VNB margins in the last quarter particularly. And in any financial year, the last quarter performance is a peak performance, we can say, and it has helped us in improving the numbers in various counts.
Okay, so this year, sir, what is your guidance? Because the West Asia crisis will have some sort of impact. So on VNB margin front, what number you are targeting?
VNB margin perhaps may not be affected due to the crisis because whatever business happens, margin is based on that business.
Okay.
But in terms of
Overall growth,
terms of volume increase, we'll have to wait and see how the crisis pans out. As things stand today, the country could manage to a great extent to contain much of the impact reaching the end consumer. But if this crisis persists for long, it can impact, particularly you have seen the recent hikes in fuel prices, which in turn can affect the purchasing power of people over a period of time by the inflation going up. But if that happens, perhaps there can be an impact on the savings of both individuals and the corporates because of the strain on their financial resources.
Okay. Sir, on the non-par mix, overall share is around, for individual business is 35%, but if it's 53%, it contributes 53% on VNB, but on the overall APE, it's 22.7%. So going ahead, how this ratio will change?
This ratio might not change drastically. See, we have taken a directional shift once we got listed and we started focusing on non-par and we have reached almost a kind of desired contribution from non-par and we are reasonably well placed at around 35% now. And we expect it to consolidate around this proportions. That is what I'm looking at. But there can be some more increase because all the products that we launched in the recent past have been on the non-par side.
Okay.
And so any growth coming out of those plans can increase the contribution a bit, but it will not be too drastic.
It will consolidate around 35%.
Around 35 to 38% or something.
Okay. But sir, in which particular segment of non-par you are seeing the kind of traction?
See, we have been continuously focusing on non-par savings growth. That is one. But we were not very well placed in terms of protection also.
Okay.
So in the last quarter, if you have seen, we have shown a considerable growth in non-par protection as well. There is a good growth in non-par protection now. Plus annuities have been growing, though we did not find that growth in the last financial year. Annuities have been growing tremendously because there's a big flare for annuities in the market, given the social security scenario in the country.
Yes,
and there's a good potential for us to focus on annuities as well. So we'll be concentrating on all the three aspects, non-par protection, non-par savings, as well as annuities, which can give. Also, the recent market volatility also makes ULIPs a bit attractive now.
Okay.
So there can be some growth, a good growth that has been witnessed in the last financial year, can continue to show some growth in ULIPs as well.
Okay, sir. Sir, apart from life insurance company, LIC is a big investor also. So in FY26, what was the overall investment strategy and profit booking in equity market? Everyone want to know that how much profit was booked by LIC in whole year, and going ahead, what would be the strategy in the volatile market?
As you know, we are one of the biggest investors in the market. Along with that, our portfolio has been built keeping in mind the long-term returns perspective. We are not a trading kind of a organization. We build portfolio. We stay invested for a long period of time and look at the return that they give. Having said that, we also need to match the yield assumptions that have been built into the pricing of products. So when we are talking about par products, a substantial portion of the investment goes into equities. Whereas in guaranteed products, we can't take that kind of a chance. So they are mostly built on fixed income securities. So when you have to match the yield that is built into a product, we need to necessarily go for churning our portfolio to ensure that our investment income matches the kind of assumption that we have made.
Okay.
So to that extent, we have been working on not only churning portfolio, but also getting enough stocks on the dividend side and ensure that we also get good returns from them. It is not just profit booking, it is to ensure that we reach the yield that we would like to achieve for under the par book, as well as a limited extent in non-par, so that we are able to match whatever has been the actual assumption under the plans.
Okay.
We have made good progress in that, but last year towards the end it was a bit difficult when the market
volatility
is there. Profit booking is not the easiest thing to do, but we need to continue to focus on that as well.
Okay, so there is no particular numbers that much of equity profit booking.
We don't have to look at a particular number. We look at a particular yield percentage that we and underlying funds have to bring about.
Okay.
That's okay.
Sir, you have also announced recently about the bonus issue. So can we say that you entered into the 70th year of establishment and just after a few days you announced the bonus, or there's something more for policyholders and shareholders?
No, every landmark achievement increases our pride, in our happiness, as well as our responsibility towards the society. 70th year is a landmark year, no doubt. 7 decades of continuous service and building trust have been a great effort and great reward that we have been getting from the market as well. We needed to take the corporation to the next level, particularly towards the fulfilling our responsibility towards the shareholders as well. So when our reserves were increasing and reached a point where we could take this call, it also coincided with our entering the 70th year, no doubt. We had to reward the policyholder by way of a bonus issue, which is 1:1, which you already seen. Now we will be announcing the record date as well. And then that will be followed by our additional reward to the shareholders in the form of the dividend that we have declared.
So dividend also you have announced, so that 10 rupees per share will convert into 20 rupees.
Yes. There is a 66.7% increase on dividend declared over the last year. Last year we declared 12 rupee on the existing number of shares. This year we have declared 10 rupee on the double number of shares. The bonus 1:1. So it's equivalent to declaring 20 rupees on the previous years or the pre-bonus issue levels. So that's a 67% growth you can take, I can say. And we have taken a cautious step forward. We have to keep in mind the increasing need for capital of our growth in business, as well as how the new regulatory changes are going to unfold in the days to come.
So can we your shareholders or your policyholder can expect something more also, because you just said that 70th year is a landmark for the organization.
It depends on how the organization's performance goes forward at the end of the Q1. And when we complete 70th anniversary, when we celebrate on 1st September, it will be too early for thinking of something more in terms of dividend. But we can think of what we can do for the policyholders. We can come up with some initiatives for the policyholders, which can be some new product launches, which can be some new additional service benefit that we'll introduce. We should think of something to celebrate.
Okay, so something will be there for...
we have to.
Yes, because it's a landmark achievement, 70 years of establishment. So recently you launched your My LIC app, and we have seen that it's a very user-friendly. So how is the traction on this My LIC app, and going ahead, which kind of more addition we'll see in this My LIC app?
See, as we have been informing you, we launched a digital transformation project of LIC.
Yes, sir.
We had to build up the platforms for that. Earlier, from whatever earlier platforms we had, we created a new layer of engagement, and on which our new digital offerings will be based. So that has progressed considerably. We have been able to create a good platform for launching our front-end applications. Along with that, we have also been building a data lake for analytics and better analytics-based decision making, and using the advanced technologies like AI and machine learning and other things. So both have progressed well. So on the 25th of April, we could launch our new next generation mobile application for the customers titled My LIC. And simultaneously, we had also launched the next generation mobile application for our distributors, agents and field personnel. All distributors can use that. That's called LIC Super Sales Sati app. Both have now, the focus has been to build in the basic features required for our customer to completely take care of their policy portfolio's life cycle. That's what has been the focus. We have introduced most of the features that we wanted to build for a very, as you said, easy usage and this thing. But we'll be further embellishing it with additional features, particularly in terms of life insurance policy management needs, as well as creating some engagement layer on that. So we'll be trying to increase the adoption levels in a much bigger way.
So more is there in that digital transformation
we have to go much forward also in that area. We are conscious of that.
Yes, sir. So LIC, IRD is all set to come up with a new distribution norms, new distribution regulations, which is also saying about the effort-based commission structure. So being the biggest insurer, sir, how you seeing this new distribution reform, how this will impact LIC?
See, we have been maintaining our stance very clearly. One, as a public sector responsible life insurance company, we have been ensuring that the distribution costs have been kept within the permitted levels. We have never been, and even when the commission regulation was subsumed or was removed and was brought under the overall expenses of management regulation, we did not change our commission policy. We had a very strong policy, board approved policy, and well entrenched in our philosophy. So we could manage our expenses well within our limits. And whatever reforms that they are now talking about is to ensure improved accessibility, availability and affordability, one. And we have also been talking about the need for that personal nudge for people to take the final decision to buy life insurance, because life insurance continues to be a push product.
Yes, sir.
So that is where the regulator is now also talking about the effort-based commission, and the kind of changes that we anticipate or we expect to happen might not be impacting LIC in a very big way, because we are having the least commission ratio in the industry as of today. But we need to certainly adapt and see that we are fully compliant and ensure that we align with the philosophy of the regulator to see that the trust in the industry goes up further.
And sir, LIC's view on the risk-based capital, because IRD is also working on the draft for the risk-based capital also.
No, see, the initial few communications have already been received by us, and based on that we have done some exercises also. Some quantitative impact study has been done, some numbers have been worked out. Now, based on what has been found out in those studies, the regulator is also working on finalizing a few of the important parameters on which this risk-based capital norms will be built. So we expect that to be more or less on what has already been shared. Yes. But we have suggested some changes so that this also is rolled out very smoothly.